Okay, welcome to the second podcast from Fire Your Accountant and Hire a Partner.
Am I fired? I'm the accountant.
You're gonna be if you don't get it right. So we're gonna talk about accounting today, and we're
Uh-huh.
gonna talk about financial statements.
Yeah, those wonderful things. They
And-
actually are wonderful. Just most people have problems with them. That's really the issue. So, it's like anything else. What you don't know, if you're willing to learn, what eventually becomes more comfortable. And it's a good idea to speak to somebody who understands the language, who can speak to you in plain English, whatever language you're in. That would really help as well. So, because a lot of people don't understand the basics of it.
So you're not gonna use any of those fancy accounting terms that make me feel stupid, are you?
I may, but I may not. I don't know. Depends how I feel right about now, and I feel kind of happy.
So what do you mean by annual financial statements? What exactly are, this just sounds like another fancy term to me.
Yeah, well, so once a year, you're required by the legislation. The purpose of the financial statements is to tell you how you've been doing, and I hope that you would do this on a monthly basis so when you get to the end of the year, it's not a big shock.
You're still using that word financial statement, and what is that, a pile of paper? Or?
Well, there's three basic financial statements that tell you what's going on. Two of them actually show up on one, and one is what tells you how you're doing. They call it the balance sheet. And to be honest with you, I don't know why they call it that, except the only thing I can think of is the word balance. Everything balances. Your assets must equal liabilities plus equity. What is an asset? That is an item that you own. For example, in layman's terms, if you went out and bought a house, that is considered an asset. What would be a liability? A liability would be, excuse me for swearing, the word mortgage. The liability, or the thing that's against it, the piece of paper, that is what subtracts from the value of the asset. For example, you buy the house, cost you $200,000. You have a loan of $100,000. You subtract the two, what have you got? You got the next thing called equity. In other words, what is left for you? If you were to sell that asset and you paid off what was owed, that's how much is left in your hand. They call it a fancy word called equity. So 200 minus 100 gives you 100. That tells you how healthy you are. Some people have 200 minus 400 minus 200, right? That's
Yikes.
called negative equity. You don't want to be in that position.
Okay, so there's another secret that I found out. I can actually establish whether I'm healthy
Or unhealthy.
Unhealthy.
The balance sheet tells you that. The other two statements, they're called income statement, or profit and loss is another term, and the other one's called cash flow. The income statement affects what we call the equity, because the income statement lists all your revenues or your sales or whatever you've sold minus the allowable expenses. Okay, but here is the definition. Let's say that you have decided that you want to meet with me and you want to hire me to be your accountant. God knows why, I'm being crazy today, but maybe you want to. Anyways. So I say, okay, let's set up an appointment, and we meet at our favorite Starbucks. I say, well, what would you like? And I pick up what you like, and I pick up the tab, and you know what? And I write a note on the back, and we have this wonderful discussion, and we go away, and I'm thinking I've got a new client, and you surprise me and go, I'm not interested. I don't want you as my accountant. Can I write that off? Yes, why? Because the intent on my part was to generate revenue. Whether I generate it or not is irrelevant. The intent. So obviously if you're meeting your friend and you're just talking about your day and whatever's going on, that has no business intent whatsoever. But I came there with a specific purpose to see if you would become my client, and therefore I can write that off. Okay. So that gives you your expenses. So when you take your income and you subtract your expenses, hopefully you've got a positive situation. Otherwise you're back to negative again. That's called positive accumulated retained earnings, or they call it net income, or they call it an accumulated deficit. And that's the part that ends up on the equity section of your balance sheet.
Well, there you go with those fancy words. Accumulated deficit, equity portion of my balance sheet. Now, oh, God.
All right.
Give me a pillow. Give me a
all
pillow.
right, I'll give you a pillow. That means, did you make money or lose money? Okay? So if you lost money, it's accumulated deficit. If you made money, it's called accumulated retained earnings or retained income. Does that make sense?
It does make sense, yeah.
All right? That's what you want, and lots of it.
That's right.
Okay? So that is the bottom part of the balance sheet that tells you your health. The other part is, do you have any cash?
Right.
That's called a cash flow statement. What does it tell you? They divide it into three areas. The bottom line is, do you have enough cash to meet the bills that become due?
Okay.
That's what it tells you. And that total, right, ends up on the top part of your balance sheet, on the asset section. That's the part where, you own something. You own your bank account or the money in it. In other words, you don't have to sell it. You can go in and just get it. That's called an asset. So those two are tied into the other one. The one you should pay attention to is the balance sheet, because it tells you whether you're healthy or unhealthy.
Okay.
You
How
sure?
is knowing this stuff going to help me, Mr. Small Business Guy, do better at my business.
Well, how it helps you is, number one, is if you look at them on a regular basis, what it tells me is this. First of all, why did you get into business? You had some great idea that you had this wonderful future that you sold your lovely bride on. If I'm talking to the guys, of course, right?
Well-
and what it tells me, just bear with me.
Okay.
What it tells me is, where are you in relation to that? So the business determines where you are in relation. So how close are you to that? Maybe it was just to make more money. Let's say it was to make more money.
Yeah.
Do those things actually tell you you're making more money or not?
Yeah.
If they're not, then the question becomes, what is it that I should be doing as opposed to what I'm doing?
Well, why can't I just look at my bank account? That tells me if I got money or not.
No, because the bank account only tells you how much money you got in there. It doesn't tell you what's coming up that you still have to pay.
So you're telling me that I can look at my bank account, but if I don't look at my financial statements, I'm going to get myself in a little bit of trouble.
And I've seen that happen many times. Not to mention that those financial statements is the same thing that our wonderful government agencies use to tax us on.
Tax. I love that stuff.
Yeah, so do I. By the way, I do love taxes. I know a lot of people think that, ooh, what did you just say? Well, it's the reason behind them. I don't know if any of you have ever been in a country where they don't pay taxes, and then you are in one that does. What benefits do you get? So don't look at it from that perspective. Oh, by the way, I don't want to have to pay any more than I want to. I just pay what I'm required to pay and no more. Now, how are you going to know that unless you've got some way to track it? Because, you know, your wonderful government agencies, that's what they're going to go for.
Well, that makes sense. So I'm actually only paying out of making money.
I'm sorry, say it again?
I only have to pay if I make a lot of money.
Say it again?
I only have to pay if I make a lot of money.
Exactly. And if you lose money, you don't pay any, but the problem is you've lost money.
Don't want to do that either.
Now, how do you know that unless you read your financials?
Oh, well, I guess I wouldn't know that.
And how can you improve unless you look at them on a regular basis?
So what should I be asking my accountant? What should I say? Should I say to him, hey, I want to look at my financial statements every month, or I want to look at them when? I want to, and
You should look at them on a regular basis. Now, you need to determine that at least once a month. But if you're somebody who doesn't really understand them, it's just like, you know, you go to anything, right? You go to, let's say, your drugstore and you ask about a certain product and you don't understand. What do? You ask them to explain it to you. I would suggest you do the same thing with your accountant. If you are someone who just doesn't get it, hey, say to him, look, tell it to me in layman's terms. Otherwise, I'm going to go find this other guy, you know, he's on some kind of a show or whatever it is. And I'll ask him. Or somebody like me. I don't know if you want somebody like me. But anyways,
Yeah.
you know what? You should ask him. And you should get him to explain it to you in a way that you'll understand. And if you don't get it, ask again.
So can you give me an example of one of your clients who you've educated that they need to start looking at these financial statements, how it's improved their business? Can you give me an example?
Yeah, of course I can. Actually, I got quite a few of those. What happened is in both situations is they only looked at their information at the end of the year, and guess why? Because it was a requirement to what? File your taxes. And you know what? They never did any better. All I heard from them is, you know what? It's the same as last year. Well, my question to them is, why is it the same as last year? And you know what? To be honest with you, they gave me that dumbfounded look. It's like, huh? Right? So I said, let me share it with you. Can I ask you some general questions? And they said, sure. I said, when was the last time you looked at them? Honestly. I go, did you even look at them? And the answer was, well, not really. I just wanted to know how much taxes I paid. I'm thinking like, okay, let me get this straight. You've worked a whole year, right? And this is, I don't know how many years in a row, and you never even looked at them. All you cared about was how much taxes you had to pay. What does that tell me about what you're doing? Not a heck of a lot,
Paying
right?
taxes.
You're just paying taxes. That's all you're interested in. And then, if the number was too high, you'd probably get upset.
Yeah.
Right? Well, if you knew why it was too high and you planned for it on a monthly basis, would you get upset? Of course you wouldn't.
I'd be happy.
You'd be happy. And you can plan for it as well because, as you start making money in the business, you're actually required to pay installments ahead of time. And if you don't, guess what? You get penalized for that as well. It's in the act. So you need to know on a regular basis what's going on. Not only for that, in these two client situations, you should see what they look like now 3 years later. They're actually showing a profit. They know why it's showing them. And they're looking at ways to see how they can minimize their taxes. Well, that wasn't evident before.
So if you were sitting in front of a large audience, you would tell them, call your accountant,
Yes.
ask for monthly reports on your financial state. They can be automatically and easily generated, so don't hesitate, right?
Yep, don't
Just
hesitate.
Push a button, right?
Yep, that's it.
The accountant can just push a button and
You should be able to with what we have
magically they come
today.
up.
And what would be better is get them to come.
And then
Or her.
And so the two things I need to do is call my accountant and ask for those. And then the second thing I need to do is put a reminder on your calendar so you actually do it. So thank you very much, Vince. I'm quite sure that all the small business people are going to enjoy what you had to say. Everybody who's listening to this podcast, if you liked it, please do me a favor, go to our website, www.accountantorpartner.com, and give us your feedback. Put some comments and let us know what you think.